Eric Muathe with Muathe.com with world market analysis for the weekend of November 12th and November 13th, 2016. Let's take a look at markets here at the end of Friday. We can see a mixed bag. We can see that the FTSE was down 1.3, the DAX was up slightly, the French market was down. As an example, let's take a look at the close of Friday's session in terms of Asia, and we can see that unchanged for the Nikkei. Japan was up 0.78, Hong Kong was down. We see that Australia was up about 0.8. Let's take a look at the Americas at the close of Friday's session. We see that Brazil was down 3.3%. The Canadian market was down about a percentage, 1.2. US markets were unchanged. Let's take a look at those charts. Let's begin by taking a look at the Australian market. Now, if you recall last weekend's market analysis, we were suspecting that we could get a pullback or at least a rally off the close of last weekend. Of course, the market closed at the lows of last week's action, but we had come back to test this line, the bottom side of the weekly RSI that held. So that was one layer of support, and we had come back to test this entry. Now you can go back and check last weekend's video, but this was the analysis, that this was the previous lows. Of course, the market rallied off the lows, as you can see, went higher, and we drew a line from there. The speculation was that the market could hit that line and bounce. So that's exactly what happened. Market bounced. In fact, we had a relatively nice gain for the week. Why? Because the market moved its weekly RSI above 50, closing at 51. Now, I think we are coming back to the other side of the equation, which is coming back to resistance. If you take the top side of the RSI, you can see the market has worked its way back to test that resistance. So short term, until we clear this line here on the weekly RSI, and given the fact that we closed just above 50, any resistance on this line here plus movement below 50 might suggest a big down week could take place in the coming week. Take a look at the daily. The daily RSI is also coming back to test topside resistance, as you can see. So this is going to be a challenging spot. If the market is to see higher prices, it needs to take out that resistance line. Also, we seem to be coming and testing a downward sloping 50-day moving average. So you combine the weekly chart and the daily chart, looks like we've walked into resistance. Until we clear that resistance, looks like more than likely the next swing trade could be to the downside. Let's take a look at the Chinese market. We can see this past week we continued to add on to the gains after moving above the previous 2016 weekly closing high. So in other words, this is a good breakout above 3108.10, which is the previous 2016 weekly closing high. So as long as the market is moving above that range, we can assume that it has a chance of moving higher. Also, we see a good crossover between the 13-week moving average and the 34-week moving average, which is bullish. So as long as the market is above this number, you have to give it the benefit of the doubt. Also, if we take a look at the previous crossover on a weekly chart, this is a 5-year weekly, you can see that we had a nice crossover here between the 13-week moving average and the 34-week moving average, and the market had a chance of staging this nice rally. So are we going to have the same thing? Of course, we don't know, but we can say for now it's doing its best to repair. As long as it holds above 3108.10, let's give it the benefit of the doubt for higher prices. Let's take a look at the Japanese market. Take a look at the Nikkei. And the one thing you do notice here, just like we observed for the Chinese market, is we have the potential here of what could be a good setup longer term or week to week, month to month. We got the 13-week moving average crossing above the 34-week moving average. Also, we can take a look from a longer picture. 5-year weekly here shows bullish crossover here and here between the 13-week moving average and the 34-week moving average. Both instances led to nice multi-month move to the upside. So Question is whether we can also see another additional move to the upside based on this crossover here in the current market. Take a look at the daily. Go back to last week's lows, or actually this week's lows. You can see the market came back to test the RSI lows line. Take a look at that perfect support on the daily RSI, which might be the reason why we bounced off the lows here about 3-4 days ago. Also, we were coming back to test this movement of the, so this recent movement of the lows of June, July here was a nice low there. So we draw a line from there, and you can see the market hit that line with uniform action and bounced this past week. So we got support on the daily chart while we have resistance on the top side here. So this line here has been good at giving us short-term highs. The break below there gave us the move off the highs over the last 52 weeks. So we've been drawing a line from there, which has been giving us short-term highs. As you can see, the most recent high came on the red line here. Markets pulled back since then. Now, one thing I do point out here, even though the market is showing support, it looks like there's still some trouble spot. In other words, the market needs to clear this recent, let's call it, over the last couple of months, this daily closing high. And let me give you that price range. That happens to be at 17,572.49, which is this daily closing high. It just looks to me like this is where it's been struggling. If you draw a line from there, you can see that even this last 2 weeks, the markets come back to test that line, especially at the highs for the week on Friday. We seem to be unable to move above that line. So for markets to move higher, given the 13-week and the 34-week moving average on the weekly chart, we need to take out this line here for there to be a short-term interest that is going to pull people back into the market. Otherwise, failure to move above this level, and eventually we might see the market struggle a little bit. So I would say this is the testing level here, above 17,572.49. Then the markets are truly bullish. For now, it looks like we are sideways. You got top side resistance on that blue line, and bottom side you can draw this line here connecting recent daily closing lows. Daily closing low there, daily closing low, daily closing low. We can draw a nice wedge there. So you got bottom side trend line and top side resistance line. In my opinion, short term, we are stuck in this range for now. Let's take a look at the Nifty next here. Begin with the Indian market. And of course, this pullback here is no surprise. Go back to the last couple of videos, no surprise at all. So I'm not going to spend time on that the market has pulled back. I want to show you why the market could actually find support around current levels. Before I do that, take a look at this drop. Relatively big drop during the week. Why? Because the market moved below RSI 50, which is one of the characteristics of what happens when markets trade around the 50 level, which might be, in my opinion, why the market had this big drop during the week. Now, as I said, I want to discuss why it could be support territory. Take this line. That was a previous RSI highs line. So you can see that this is where the market moved above a range. So once we clear that blue line there, the market has been higher since. Okay, in fact, we went on a nice run. So what we do is we extend that line. And right now you can see where the market closed for the week. It is coming back to back test that blue line. If it can bounce on that line and move back up, that's going to be good for support and a reason for the market to bounce week to week. So that's one line that could offer support. Let me show you a second line, and it is this line here. You can draw it, this breakout. This breakout brought the market off the lows of 2016. We draw a line from that breakout line, and you can see that again, market closed exactly on that line. I didn't do it, you didn't do it, the market did this on its own, so we have to pay attention. So I would say if you take those two lines, the previous line and this line, you can see both lines are coming to a level where the market would just need to be positive to confirm support. If that's the case, then we can see that if these two lines hold, then we get an opportunity of moving to the upside. At the same time, given those two lines, if we cannot hold and we break below that, then we are going to see a continued push lower. If you take a look at the daily chart for the Nifty, this was the RSI lows level here that began the nice move higher. So we've been drawing a line from here where we should expect, if it can bounce with uniform activity back above that line, that could be good enough for support. Now keep in mind, generally speaking, the market is coming back over the last week and a half, 2 weeks. It's kind of holding this green line, but while it's doing that, we can see that it's been making lower lows. So you got prices making lower lows here day to day, but the RSI generally is holding this line with uniform action. That suggests to me that eventually, if the market can hold that green line, that this is good enough at some point to engineer some type of a move to the upside. So the daily charts look terrible, but I think also showing that this is where they could actually bounce. All it needs is holding above this green line, and the market might have a reason to move higher. Keep in mind, at the highs for the week, we can see that the market came back and has been struggling on this top side. The simple RSI resistance line has been a problem during the highs here and again here. So we can conclude that until the market moves above the blue line, so until the market can move above this blue line, we continue seeing a market that is net under downside pressure. In fact, if you take a look at the hourly chart, you can also see where the market has been struggling based on how you look at it. But from my point of view, take a look at the RSI on the hourly. You got at the highs, I believe, of Thursday, I believe, or early Friday, those resistance here. Simple line connecting RSI highs stalled the market movement. Okay, and also we can see that coincides very nicely with the previous break line. This break here of the highs or recent highs on the hourly. So the break there, we draw a line from there. Should be something around there. So you can see this red line has been a problem for the Nifty. You got resistance during these highs here, resistance again here for the highs there, resistance here for these highs. We came close here for the highs there, and then we hit that red line for the highs there. So the hourly continues to be a problem. Until we can move above these two lines, we're still looking at a market that is net under downside pressure. In fact, go back to that monthly chart, and I've been talking about this for many weeks. I'm sure you've heard me talk about this before, but the problem with the Nifty is this line here. I'll just draw it there. It has been where the market has began major bear market since the 1990. A break here for the movement off the highs of 2000, a break here off the highs of 2008, resistance here with uniform action off the highs there, and we went on a bear market run during this period here, and now we broke below that last year 2015, and we hit this with resistance. So week to week, month to month, the market still continues to be very bearish. Keep in mind, we failed to move above the recent or the current monthly closing high. So there was a breakout attempt here that failed. So you take all that together, RSI resistance, failed breakouts, net monthly charts are still pointing down. Take a look at the bank Nifty. We can see that this market is trying to move higher, but it needs to clear 2015's previous, and I believe the current monthly closing high, if it is to do well. And so the challenge here is if it can clear 19,843.75, which is the current all-time monthly closing high going back to January 2015. So we've seen that this week there was an attempt to move above this level, but the market is back below it. So we need to break out above 19,847.375. Otherwise, without breaking out, this market continues to be suspect, in my opinion. Otherwise, bulls would like to see the market trade above that. So if the market can trade above that previous monthly closing high, that's going to be very bullish. For now, we seem to be stalling. As you can see, let me draw this again here. You can see we've been unable to close above that line. You can see failed breakout here, failed breakout here, failed breakout here, and again failed breakout here. So over the last 4 months, the markets failed to move above that 19,000. So markets been failing to move above this 19,843 level. So until you can break out above that level, I still call this market suspect. If you take a look at the daily chart shows two resistance lines. The first one is off the break. There's a break here, and so we draw a line from there. This break brought the market off the highs there, so we are coming back to test that line. As you can see, we've already went above the line and back below it with uniform action. That by itself is a sell signal. That's one line. The other line is a back test line, which is failing. So you take the previous line like this, extend it out. You can see that the market, ever since it broke below that blue line, came off the highs there. We touch the blue line here with a back test failure for these highs, and now we are coming back and showing another resistance there. So if I can do that with a clean chart, pretty much back test failure being confirmed right there over the last 2 days. And also we can see resistance on the hourly for the bank Nifty. Very simple line. As you can see, there was RSI trend break there. This trend break brought the market off the highs. We draw a line from there. Every time we hit that line with uniform action, we should get a short-term high. Resistance there for those highs. Resistance here with uniform action for the highs there. And of course, we got that pullback on Friday. So it has a lot of work to do if it is to see higher prices. It needs a breakout on the monthly chart, otherwise eventually it rolls over and goes lower. We take a look at the South African market by way of the Dow Jones South African Index. We can see if we go back to the previous breakout attempt that failed, we've been expecting lower prices. Keep in mind those failed breakouts here on these weeks, failed breakouts, and eventually, as I always say, failed breakouts are notorious for taking markets lower. That's exactly what has happened. So the question is, what next? And I'll show you what I think here. If you go back to a 13 weeks of data on a weekly chart, it's a mouthful, but you can see what I suspect is happening here, could be happening, is come back and figure out where the market came off the lows of late 2008. This line here, you can see that there was a slight breakout, and since then, of course, the market has gone on a fantastic recovery run. I think what's happening here net is the market is coming back to test this line here. As you can see, this green line was support right here towards the end of 2015, early 2016. The market held. We are coming back to test that line. So clearly, if it can bounce on this green line, that's good enough to begin another recovery in the coming weeks. If for the first time since 2009 it trades below the green line, then that would suggest that we are entering a new phase. So either we get a break below the green line for continued move lower, or the market finds support on the green line and we move higher. So since we closed exactly on the line, we are going to have to wait and see which way the market wants to go. So here we have a chance either for support or failure to hold support, which might suggest lower prices. Personally, I won't be surprised if it finds some type of short-term support, because take a look at these lows here, and we can see that the RSI began this movement, short-term RSI movement, and the market recovered off the lows of February or January this year. So we draw a line from here, and if you can see this, what's happening here is that we are making lower lows in the price action here, but the RSI is staying on the same line. So again, if this can start a recovery, given that the RSI has held on the green line, so RSI support, if the price can just recover here, that's good enough for positive divergence that might actually stop the recent slide. Otherwise, if it breaks below the green line, If it breaks below that green line, then support has been broken, and of course we are going to have to see lower prices. But if I was forced to pick which way the market might decide to go, I think this is good enough support in my opinion. As you've been making lower lows, you can see RSI has not made fresh lows, and I think that eventually might lead to a recovery short term. Take a look at the French market, and just to put the things in perspective here, French market also found support. If you take a look at RSI lows, so the market came back and tagged this RSI lows line that has been support going back to the beginning of the year. So good support there. Also it came back to test this RSI level right here. So this green line somewhere there comes from this RSI entry of the lows. Market's been bouncing on this green line short term, giving it a reason to bounce. We did the same thing at the end of last week, and now the market is bouncing. So you got bottom side support. Unfortunately, you got top side resistance. All right, so you got support and resistance. So I think the market is stuck in a range here. You can actually see this clearly if you draw a line. Let's say you draw the line connect here. You got top side resistance, and you got the market showing support here. So looks like we are actually stuck in a range. Until we can clear this range, either for a move higher or a move lower, I maintain that for now, looks like the market is stuck in this wedge type formation or within this box. So you can see we are stuck in a box here. I don't know which way we are going to go, but at first we have to either break out or break down. Now we can also see similar type action if you take a look at the German market. The German market also stuck in a range here. You can just see that we've been trading within that box for a long time. At some point we'll either break out or break down below the box, but we are stuck in a range for sure. That's for sure. And who knows which way the market is going to resolve. Also we can see top side resistance as the market tries to move higher short term, and also we see good bottom side support. So we are stuck in the range. Either you want to look at the RSI wedge formation here, or you want to look at the box formation. Either way, the conclusion is we are still sideways. Keep in mind there was a line here that we discussed that has been support. This gave us the entry of the lows, uniform activity support here and here, off the lows there, and then again uniform activity here during the lows of this past week. In fact, confirmation of a sideways market can be seen by taking a look at the Euronext market here, and I'll show you why I think it's still in a range. Number one, take a look at this price action. We're pretty much stuck in this wedge formation. So here we are taking the recent weekly closing lows, weekly closing low there, weekly closing low, weekly closing low to get this line, and then you get top side price closing highs, weekly closing high, weekly closing high, weekly closing high. So we were definitely stuck in this wedge. At some point we are either going to break out for another push to the upside, or we are going to break down to continue or at least to pull back. So a breakout maybe next, or a breakdown, and we don't know which way based on this chart since we are still stuck in this wedge. Take a look at the FTSE. Now the FTSE lost most of the gains for the week, but I'm not giving up on it yet until it breaks this line of support. You can see that this is very good, easy to identify line of support. So as long as the market is bouncing on this line, I would give it the benefit of the doubt. Of course, if we break below that line, any break of that confirmed line might be short-term bearish. Okay. Also, if it can bounce back above that 50 RSI level, if it can bounce and hold the RSI 50 level, that's gonna be good enough support. So either we get support here or a break. Also, there's another line connecting this line here. So this line was resistance line, resistance, resistance, resistance here. Once we broke out above that line during this period, of course the market went on a fantastic run. and now you extend the same line, and you see that we are coming back to back test this line. So if it can hold above the two lines week to week, that's very good. If it breaks below those two lines, then that's when we are going to know that we are due for a major correction. Of course, if you go back to the highs for the FTSE, we made an improvement in price highs, but we saw a problem with this because we had RSI showing negative divergence. Of course, we were expecting a pullback. We got that pullback. So now the question is what next? And again, depends on that weekly chart. If we can find support, that's good. If we break below the weekly support, then we might see the next swing trade being lower. Net, I would say the daily chart looks okay. That's my net conclusion, because this was the entry of the lows. Let's draw a line from there. You can see that market's been using this for short-term support. Uniform activity here for the lows here, came close to the line for the support there, bounced on this line for the support here. We went below the line, back above it for the lows there, and now we are coming back to test it. We haven't broken below the green line. Also, there's another line connecting RSI lows that is holding. So net, I would say the daily chart is still positive. As you can see, the markets come back over the last week or so and bounced exactly on this support line. So I think the conclusion here is that daily chart is fine, unless at some point it breaks below the blue and the green line. But we haven't seen the break. We have to assume that net, the market continues to be healthy. All it needs to do, to be honest here, and to simplify this, is it needs to hold this line of support on the weekly RSI. If it can bounce on this weekly support line, that's good. If it breaks below that, then we know that the market is due for a major drop. And of course, the worst picture here is the monthly chart for the FTSE. We've been talking about this. This is the worst picture here. We have a failed breakout attempt. And as we pointed out, failed breakout attempts are notorious for taking markets lower. We also got resistance on the top side here, on the monthly RSI, which is not good. And in fact, where the resistance is taking place on the monthly chart is very bearish. If we draw a line from the break, draw it somewhere there. So that break line becomes a problem for the FTSE because it coincides with previous major sell signal lines. We had a break below the line and back below it. So we had a break here off the highs there for a major drop in 2000, 2001. Again, we break below this level here for this break off the highs of 2007. Of course, we got the bear market of 2008, 2009, and here we are again. We've hit that line and now we are stalling. Could this be suggesting that we are due for another major bear market going into the next 1 or 2 years? It's a very likely possibility. And the same thing is true with the Canadian market. Let's take a look at the Canadian market. The monthly chart, Canadian monthly also continues to be bearish in my opinion, given where it is stalling right now. And just to demonstrate this, take a look at the big bear market drops. This is the biggest one here. Ever since we broke below that line, we went on a major bear market drop. We broke below here, uniform activity rejection there for the highs there for this major drop. So this has been a problem area. You don't want to show resistance on this level because generally speaking, you open the possibility for a major bear market drop. So the Canadian market month to month is looking like it could easily be a market that drops. We take a look here at the weekly chart. If it can hold above the RSI 50, short term, I would give it the benefit of the doubt. But just like as we've seen in other markets, right now we seem to be stuck in a range. This is where we've been trading over the last couple of weeks, and we are still within that wedge. We have to wait for this market to resolve, either for a breakout above the wedge, which would be bullish, or for a breakdown below the wedge, which would be bearish. Net, the market continues to try and hold the daily chart. As you can see, RSI lows line held this past week, and also off the lows here, which is this RSI movement. So this movement here, draw it another way. RSI movement brought the market off the lows. We draw a line from there, and you can see the market's been bouncing on this green line for short-term re-entries. Even here, uniform activity below the line, back above it for the lows there. We bounced with uniform activity for the lows of the past 2 weeks, and now we are back to test that line. As long as the market can hold above those two lines, the market has a chance of day-to-day recovering, even though, as you can see, for the most part, we are stuck in a sideways market here. So really, direction is hard to discern based on the fact that we are still sideways. Let's take a look at one other market. Month to month, I've been trying to impress on you about the Brazilian market running into problems on the monthly chart. The reason why I've been saying that this is easily where it stalls, and for the month so far it's down about 8%, consistent with what we've been looking at. We saw the break of the 2010 highs here. We've been drawing a line from there, and I've been saying if it comes back to that line and stalls, be on the lookout, because it's going lower. Why? The last time it tagged this red line was for the highs there in 2014. We went on a major bear market drop. We've worked all the way back to test the same line, and we are seeing resistance. Keep in mind, this red line happens to be at about 61.8. That's why I was saying it's important to expect lower prices based on resistance. So I would say month to month, the Brazilian market continues to be looking very bearish. Not day to day, but month to month. But that doesn't mean that it drops every day. For example, take a look at this entry off the lows here in February or January of this year. So the market is pretty much coming back to test that line. So we will draw a line from there. You can see that it's used this for support here, uniform activity support for the lows there, almost to the day. Uniform activity support here of the lows there, almost to the day. And now all it needs to do is move back above the green line with uniform action, and that is where it's gonna get day-to-day support. So around here it could find support. Otherwise, if it fails to hold above the green line, something it hasn't done since January, then failure to hold above the green line would confirm very bearish monthly chart. So it could find support here day to day, but go back to that monthly chart. Month to month, we continue looking at the Brazilian market looking absolutely bearish month to month. Eric Mwathe with Mwathe.com. Of course, I'll keep you guys posted as we go along. Good luck, peace, and blessings. E-A-C-S. Woo! Yeah! Woo!